Hi, I'm Kate, and this is the Week in Forex, brought to you by MaxiForex.ru. Today, we'll take a look at the past week's highlights. The global equity markets were up firmly, while the dollar continued its slide. In fact, the dollar index briefly touched below 75 before beginning its retreat. We saw the euro break 150, while the Aussie dollar broke 93, and the Swiss franc nearly hit parity with the greenback. For a closer look at these market movements, we're joined by foreign exchange analyst Martin Smith. Hi, Martin.
Hi, Kate.
Now, the euro broke 150 after some really great anticipation, but the market reaction was quite subdued. What do you make of that?
Well, the length of time to actually break 150, coupled with the ECB's comments about concern over the euro's role as a reserve currency, basically stopped the rally in its tracks.
Well, I mean, we see commodities are rallying very hard again. Do you foresee this as a problem in the way of an economic rebound?
Well, generally speaking, it would be. However, as long as the PPI continues to print near zero, it's not a factor. However, as you pointed out, commodities have rallied very hard. So in that regard, some of the PPI is now stale, and we should keep an eye on future PPI releases to see if those prices start to factor in. In addition, it does seem that the market is placing more weight than usual on some of the economic data releases, as well as central bank comments. A prime example of this, of course, would be the Bank of Canada, the BOC. Basically, they downgraded their own currency. We need to realize that those comments by the central bank were intentional in order to send a clear message to traders. And obviously, the traders heard the message loud and clear. I mean, the Canadian dollar was trading around 10265, and before traders were done, the Canadian dollar hit something like 10525, and that's in a week when the dollar was getting crushed and oil hit its yearly high. So that move could have been even more severe.
It seems that it was a real theme for the week that central bankers were readily putting out commentary, didn't it?
Definitely. Yeah, I think central bankers, of course, keep a close eye on the currency markets, and they saw coming into this week that currencies were at key levels. In smaller markets, you'll find central banks intervening, but in the larger markets, of course, that's much more difficult. So what central banks do is issue statements, and then you see the effects. I mean, just look at the Canadian dollar and the euro.
With so much volatility in the markets, what do you anticipate for this week ahead?
The fundamentals are driving this market, so economic data releases are very important. In the US, you should follow where GDP and jobless claim numbers print. At the end of the week, of course, the Bank of Japan will announce its rate decision. I think we'll see a very mixed bag this week, actually. It's really too hard to call, but I'd say that many of the US numbers have surprised somewhat to the downside, while we've seen some surprise numbers to the upside from New Zealand, Australia, Canada, and even out of the UK. If the risk appetite subsides, then we'll see the dollar firm. The keys to watch here are global equity market performance, commodities, central bank statements, and as usual, economic data releases. I would think in that order of importance, actually, these will be the market drivers for this week.
I mean, there just seems to be no stopping the dollar's slide. At what point do you think this will turn around?
The fear is that until the US Federal Reserve raise rates, or at least pull back some of the quantitative easing programs, the slide will continue. And we could actually be looking at 9 more months of a weak dollar. This is the reason, of course, why central banks are so concerned. There's simply no demand for the dollar. As the dollar weakens, it becomes more costly for the US to import goods. This in turn slows global economies at a time when they're already, of course, increasingly fragile. Strangely enough, on the flip side, if for one reason or another risk appetite disappears, then dollars will be in demand again. It's possible that by year end, when companies and banks shore up their balance sheets and start hoarding cash together with traders removing bets from the table in order to lock in profits, that demand for the dollar will start to rise again.
Well, Martin Smith, thank you very much for your insight into the Forex market. And thank you for watching. Remember, for more on the Forex market, visit us at MaxiForex.ru. Thanks for watching.